Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well. Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday morning pre-market webcast. Okay, daily chart, and you can see the bands are starting to tighten up. We're fighting over a number of moving averages and inflection points, and the issue becomes who is going to get the resolution here. So what we've seen in the last two sessions are two big moves by the bears to try to convert key areas. Actually, the last three sessions. You had the push down to weekly pivot that held. Let's get on an hourly chart. You had weekly pivot support, but then we had the bulls really didn't perform up here. Then you had the gap down. Traded as low as 81.75, but we spent the rest of the day just kind of winding back up to the upside to try to fill that gap. They tried to fill it first thing in the morning. They were a little bit short. They came back twice here. Now, this is the hourly midband, but more importantly, it's the daily midband. So what you saw was the longest term level that was involved immediately with price hold as support. And once that happened, they spent the next 4 hours building off of it. Pretty flat in the overnight. Now you're seeing a grind to higher highs. We're currently long 18. It just became apparent that once those 01s held, that the bleed higher was coming. It's a very key area, and they could not convert it. So as we head into today, the bears really have their work cut out for them. They're going to have to, hold serve up here in the 31s. They're going to have to get below this hourly midband. They're going to have to re-engage the weekly pivot. They're going to need to break it, get back through this entire zone of monthly pivot to weekly pivot, and make some noise down here. Otherwise, what you're going to get is your typical slow drip higher into the jobs report. We've seen it a million times, and unless the bears do something about it early on today, you're going to see it for 1,000,001 times. It's what happens. The bears have had a ton of opportunities, not only this week, but you head into last week. You had the 47 lows, these potential highs. It starts to ride. The gap down was a real opportunity, and they couldn't get it done. They could have done just barely missing a gap fill and a really hard fail, probably back to retest this area. But the daily midband held it in. So this green line, remember, that's the delineator between whether we're buy dips or sell rallies. We remain buy dips. So we're starting to shed the back half of the 20-period average. So the Bollinger Bands are going to tighten up even more than they are now. 6.4 isn't all that wide, isn't all that tight. They should get tighter as this directional pricing falls away, and what you're left with is a lot of this engaged with the green line. If you're engaged with the green line every day, and we have been pretty much every day here, then you will get tight Bollinger Bands. All right, everybody have a good one. I'll be out with some stuff on social later on. Trade them well, and I'll talk to you then. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.